Hi everyone, welcome back to our very first information session on my new group, which is the Property Investors Forum. I have prepared a session today which is all around choosing the right investment property. I think that's a great place to start for any investor. Whether you're a seasoned investor and you're looking to add to your portfolio, or you're new to investing, I'm hoping that this information will be valuable to you moving forward with your investment journey. So a few tips that I've written down just this morning actually. This is a last minute video, so I apologise if I have any information that I might double up on or miss out in this session, but you do have an opportunity to ask questions on this particular post, so please feel free to do that, and I'll definitely come back to you on the post with your answers. And if we do have some questions that I guess are relevant to this particular topic, I'm happy to do another session to cover off on that as well. So please, this is obviously for you guys, so ask away any questions that you have. So my first, and sorry, I will be referring to my notes to make sure I cover everything. My first topic is, obviously the first step is to make sure you understand what your budget is. So I would be looking for some expert advice in that field. You certainly can talk to your bank manager if you have a bank manager. My advice would be to perhaps talk to a mortgage broker. And there are lots of options in Launceston, some fabulous mortgage brokers out there that can provide that service. So if you're interested in my tips on who you might be able to see for that information, happy for you to message privately or post on this forum. So that would be a great place to start, because a mortgage broker will sit down with you and have a look at your budget, have a look at where you currently are with your savings, and also any equity that you might have in your existing home that you might be able to use to lend in order to get into the market. So you don't necessarily have to have a huge deposit to buy an investment property. If you have some assets that you can use as collateral for buying your first investment property, that's definitely a great option as well, depending on your position. And everyone's going to have a different financial position. So talking to someone about where you're at is a great place to start. So once you've established your own budget, you can start looking at the market and looking within your budget. And I'd just say to you that if you find that you're not quite there in terms of your budget to buy a property that is low risk, it might be worth waiting that little bit longer so that you can buy something in the median market where you have the lower risk, and of course you have the opportunity to buy something that's going to give you some capital growth long term. So that would be my tip in starting out. Don't rush into it if you feel you're not quite ready, because there are some hidden expenses with an investment property that you need to make sure you're, I guess, ready for. So first tip is budget, talk to a mortgage broker. Second is when you are in a position to buy a property, I guess you need to work out what type of property is the right one for you. And again, a mortgage broker can help you, because you can look at your current income and whether or not it might be worth looking at something newer or something that potentially you could improve. So these are the questions that you can be asking the professionals and getting some advice around that. Builders, developers quite often get asked the question by developers who are looking to perhaps develop, have a development project, and they're looking to keep one or two and rent the properties and keep that portfolio rolling. It's always a good idea to talk to a property manager before you start those developments, so you can find out from them where the demand is, the location that might be in demand, and also the type of property that is currently in demand. And of course, you've also got to be careful of overcapitalising when you're looking at building a development as well. So there are a few tips for builder developers. The next is location, and this is an important one, and I think that a lot of people make the mistake of buying the property based on return. So what the likely return on investment might be. So you might be buying in a low market area. You've got to be really careful there of making sure that you're buying a property that doesn't provide a high risk, which, you're looking at the suburb, you're looking at the surrounding properties to make sure that the tenant that you're going to attract to that property is going to be a low risk proposition. So that is something that, as an office, my business, we're fairly particular about the properties that we manage, because we know that the property itself will attract the tenant that it deserves. So make sure that you're buying in a good location and the property is presented well for tenancy and has that low risk element. So location, obviously a couple of options there. Diversity is great if you are looking at building a portfolio. For those who already have property, you might say for instance have a property in a suburb that is close to schools, close to transports, close to obviously facilities, so that you are attracting long-term families. That might be a great safe option where you maintain long-term tenancies. The other option might be that you want to buy something nice and close to the CBD that gives you that extended capital growth opportunity, something with some character and close to the hospital and the central facilities. So there are a couple of options there depending on your budget and which way you decide to go. But sort of anything close to the CBD surrounding suburbs, you're fairly safe. But I'm happy to talk to anyone about, options of location and high demand areas for renting. So location is the second point. Features, think about what it is that you want in a home. And I know that it's only an investment property or it's only a rental, and I hear that quite commonly from property investors, and that's dangerous ground, because you want to attract tenants like you, tenants that are going to care for the property, maintain the property and provide, again, that low risk. So in order to do that, you need to make sure you're purchasing a property that you would potentially live in, not necessarily, the house that you want to live in, but you would live in it, so it's comfortable. So you're looking at things, particularly in Launceston. We all know that winter is not a great time. So looking at heating efficiency. So not just that it has plenty of heaters in the property, but is the heating efficient? Have you got insulation so that the heating's not going straight up through the roof? So you need to make sure that the property is heated efficiently. That's a very, very big point for renters. The first thing they look for is whether or not, and the most common is whether or not there's a reverse cycle air conditioner, because you get both options of heating and cooling. So that's the first thing. Also, in terms of features, modern conveniences these days, tenants are fairly particular. They want the dishwashers, they want life convenience, because life is busy. Everyone is sort of running around and busy, and they want to be able to have those modern conveniences such as, instant heating and dishwashers and the like. Secure parking and storage. It is very common that a tenant will be looking for at least a garage, and not necessarily always for parking the vehicle, but they like to have that option for extra parking, because they could be coming from a larger home, and if they're coming from a larger home, they want to know that they've got that additional option of storage, but also for vehicle parking. So garaging is a great feature for a rental property. If you purchase a property that doesn't have a garage and it's the right price, obviously if there's space for a garage, that's an awesome improvement that you can do on the property. And the next point, storage, and this is often something that people forget, and particularly with character homes, quite often they're not coming with good storage, so built-in wardrobes in bedrooms, linen cupboards, those sorts of internal storage solutions, certainly something that renters are looking for, because they're not going to move from property to property with a wardrobe. So look, that's something that is a must with a property, and also for presentation. There's nothing worse than going into your property and finding that because there's no storage, there's just stuff everywhere. So I definitely consider built-in wardrobes. Easy access to the property. Be careful of buying, I guess, properties on steep blocks that are difficult to maintain and difficult to access. That can be something that is a little bit off-putting for tenants, and certainly to maintain the grounds becomes a much more difficult process for them. So low maintenance grounds and easy access for the property. So something flat is ideal, because you're then opening up to a wide demographic as well. So you can, you'll also open up to elderly people who might have difficulty with stairs as well. So I guess when you're looking at a property, if you are open to the broader market, then your chances of letting the property to the right tenant are going to be much higher. So the last thing is consider depreciation benefits, and little disclaimer there, I'm not a tax expert, so I'm not going to go into too much detail there, but talk to your accountant. So get these advisors around you is another tip that I would give you. So your accountant, your mortgage broker, a property manager that can give you independent rental assessments. These are and financial advisors if you're going that next level, because they will give you the right advice around that. Depreciation is a fairly complex thing, but essentially in a nutshell, if you're buying a brand new property or you're building a brand new property, you have the benefit of depreciating the items or the contents within the property, and sometimes that extends to the building itself as well. So if you are on a high income and you're looking to reduce your taxable income, that's certainly a good way to do that for people in that fortunate position. So that's something to talk to your accountant about. The last thing is just buyer beware. I always, when I'm talking to investors, say, look, you need to make sure that you're doing all your checks and balances. So when you're purchasing a property, and this will be another episode, there are steps that you need to have in place to make sure that you're covering all of your risks, because the expectation is on you as the purchaser to do that due diligence. So in summary, make sure you have the right advisors around you. I hope these tips have helped you today. Thank you so much for tuning in, and I hope to see you all next week.